Okay, so last time I stopped with this part, stock dividends. No? So this time let's have one example for small stock dividends. So we have Dividend Corporation has 4,000 shares of $5 per common stock outstanding. So Dividend declares 10% stock dividend on March 5, payable on March 27 to stockholders of record on March 14. So market value of dividends common stock on date of declaration is $12 per share. So this one is a 10% stock dividend. So meaning it is a small stock dividend. So if it is a small stock dividend, so based on this information, now the stock dividend is to be debited for the market value of the stock. So here in this case, the market value is $12. So the reason why the debit is stock dividends, so that is 10% times of 4,000 is 400. Then 400 times 12, so you get 4,800. And then for the stock dividends distributable, so you have the 10% times the 4,000 times the 5. So you have the stock dividends distributable, 20,000. And then for the excess of 12 and 5, which is 7, no, then multiplied by 400, then that is 2,800. Okay, so we debited the amount of 4,800 again based on 4,000 times 10%, and then we use the market value of the stock, which is 12 per share. Okay, and then any excess no, between these two, 12 and the 5, will be credited to the paid-in capital in excess of what? Or the premium, kung tawagin din natin, no? Premium or share premium. Pwede rin, ha? So, journal entry on date of distribution will be as follows. So it will be stock dividends distributable, debit, then credit common stock. So take note that what you will be debiting will only be the stock dividends distributable, which is this amount and this account. Okay? So the credit now will be common stock because it is already paid. And then again, no, at the end of the year, for the closing entry, you will debit the retained earnings and then you credit the stock dividends. So that stock dividends came from this one. No, yan. Okay, so it will be credited to stock dividends and then debit retained earnings, 4,800. Okay, so for the large stock dividends, recorded similarly to small stock dividends, except stock dividends account is debited for par or stated value instead of market value. So the stock dividends distributable credited for same amount. Accounting on date of distribution and closing process at year end are the same as small stock dividends. So just to reiterate that, if this is a large stock dividend, so let's say this one, instead of 10%, they declared, let's say, 30%. No? So let's say it's 30%. So if it is 30%, so 30% times 4,000, so that's 1,200. But this time, you will only multiply that by 5. So you're not going to use the $12 per share, which is the market value, because it is a large stock dividend. So again, if it is more than 20 to 25%, then that is to be multiplied by 5. So that is the stock dividends here. Instead of using the market value of 12, you will use only the $5. Okay, so yun lang yun. So wala kang paid-in capital lumalabas doon because you're using the par value or the stated value. Kaya inuulit ko, wala kang magiging paid-in capital, no? Wala ka nito. Pagka large stock dividend yan. Okay, effects of stock dividends. So stock dividends do not affect assets, liabilities, and the total stockholders' equity of the corporation. Stock dividends account is close to retained earnings. And then there is no distribution of corporate assets. So basically, the stocks will only increase. Huh? Your stocks will basically increase because of the stock dividend. So stock dividends merely transfer part of the balance of the retained earnings account to one or more paid-in capital accounts. So lumipat lang siya, ano? Kaya from retained earnings, pumunta lang siya ng capital stock or common stock, no? Kasi nga dividends siya, stock dividends. So what about stock splits? So exchange of one share of an old issue of stock for multiple shares of a new issue with a reduced par or stated value. So this time for the stock splits, no, still your shares will increase, but this time the par value or the stated value is reduced because of the number of shares that you will have. Kasi stock splits, kung meron kang halimbawang isang stock dati, pwede siya maging dalawa ngayon. So the total value of that stock will be the same, but the par value or the stated value now is reduced, no? Because now you have two stocks. This is the example that I gave you. No? So rationale, to improve marketability of shares by reducing market price per share. Then this leads to wider ownership of the stock. And stock splits requires no formal journal entry. So may be recognized simply by a memorandum notation in general journal and in appropriate capital stock accounts. Stock splits do not affect assets, liabilities, or stockholders' equity of a corporation. So example tayo, Splice Corporation has 10,000 shares of $10 per common stock outstanding. Splice declares a 2-for-1 stock split. So each shareholder will receive 2 shares of new $5 per value stock in exchange for each share of $10 per value stock. So memorandum entry in the general journal is as follows. Declared for 2-for-1 stock split, issued 20,000 shares of 5 par common stock in exchange for 10,000 shares of $10 per common stock. So para lumalabas niyan, ganito siya, no? To explain it further, let me show that in an Excel. So ang sabi dito, we have the 10,000 shares of 10 par common. So magkakaroon tayo ng 10,000. So times 10 dito. So ito yung value natin lumalabas. No? Ngayon, ang sabi rito, each shareholder will receive 2 shares. No? 2 shares. So ibig sabihin nun, ito, madadagdagan siya ng 10,000 shares. No? 10,000 shares pa rin. Pero ito yung amount nito, 100,000 pa rin siya. Okay, so ibig sabihin dito pa rin siya, ilalagay natin total. So dito 10,000 shares siya. So all in all, now you have 20,000 shares. Okay, may 20,000 shares na value ngayon. But this time, since this is the par value, no? And this amount will not change. No, 100,000 pa rin yan. But this time, because of the 2-for-1 stock, so ibig sabihin yung one stock mo magiging dalawa na, so madadagdagan lang ng 10,000 yon. So magiging 20,000 na siya. Then you divide now 100,000 by 20,000. So the par value of that stock now is $5 per share because that is the effect of the 2-for-1 stock split. No? So again, there's no journal entry, but only a memorandum entry in the general journal as follows. No? So declared 2-for-1 stock split, issued 20,000 shares of $5 per common stock in exchange for 10,000 shares of per common stock. Okay? So ganun lang ang effect ng stock split. Yung dati mong 10,000 shares, magiging 20,000 shares because of 2-for-1 stock split. And then, of course, the par value will change, but the total value here will still be the same. So for the summary of dividend and stock split transactions, so you can refer to this one. Okay, so na-discuss na natin yan. So maybe you can go over this, this table. Now, retained earnings appropriation. What does it mean when you say retained earnings appropriation? Because the retained earnings can be appropriated or unappropriated. So kanina pinag-usapan natin yung unappropriated for the dividends, because you cannot declare retained earnings which is already appropriated. It should be unappropriated retained earnings for you can declare dividends. So this time we have the retained earnings appropriation or appropriated. So restriction of retained earnings by board of directors for a specific purpose, and then used primarily to limit the availability of retained earnings for paying dividends. Then does not affect total retained earnings. Just separates into appropriated and unappropriated. So does not affect cash or other assets. So the amount of the retained earnings basically are the same. But this time, you will separate the retained earnings into appropriated and unappropriated. Yun lang ang sinasabi dito sa retained earnings na to. So it does not affect total retained earnings, but it just separates it into appropriated and unappropriated. Kaya kung limbawang meron tayong retained earnings, for example, kung meron tayong retained earnings dito, let's say retained earnings natin ay 1 billion. So let's say, ganyan. And then let's say we appropriated certain amount for expansion. We will have the retained earnings now debit. Let's say 200,000. And then we will have credit to be for the appropriated. So 200,000. So the meaning, this retained earnings, now originally 1 million, will now have retained earnings appropriated of 200,000, and then retained earnings unappropriated 800,000. So still the total is the same as this one, 1 million pa rin. But you separated only the retained earnings into appropriated and unappropriated. So retained earnings appropriation pa rin tayo. So we have Chem Corporation has decided to build the new waste treatment plant. Board of Directors decides to appropriate 200,000 of retained earnings to finance the project. So yun na rin pala yung example ko. So we debit the retained earnings, 200,000, and then credit retained earnings appropriated for treatment plant. So you have to identify what particular appropriation was made for the retained earnings. So that is the journal entry, formal entry for the retained earnings for the appropriation. So appropriating retained earnings is unusual today. So stockholders generally do not regard retained earnings balance as total amount likely to be distributed as dividends. Then restriction of retained earnings often can be described in a footnote to the financial statements. So sinasabi lang nila na hindi na masyadong na-apply yung appropriation of retained earnings. But it can be done to the footnote, or to the notes to the financial statements. Now, for the statement of the retained earnings, we can have, of course, yung heading natin, and then you have the retained earnings beginning, and then you have the net income for the year, so you add. So we have the total, and then for the payment of the dividends, so we have the cash and the stock dividends. So the total here is 50,000. So deduct this 50,000 from 1,380,000. So meaning the retained earnings now has a balance of 1,333,000. 1,330,000. Okay, so that's the end of retained premiums.